Okay, folks, violence. So we've got a lot to cover. Firstly, we need to break down a small stock that is absolutely skyrocketing right now on a deal with a much bigger and much more well-known company. Secondly, we need to discuss a small transcontinental shipping company that is going parabolic as shipping companies and overall transportation around the globe brings in insane profits with insane prices. They're not just shipping goods, they're shipping buckets full of cash. Thirdly, I do want to briefly discuss another stock that has a familiar pattern and setup that we've seen many times before, and I want you to be aware of it. And then to cap things off, you know and I know earnings season is rapidly gearing up. Everyone from Netflix to that lady down the street is going to be revealing how their Q2 went. And I don't know about you, but I'm pretty damn bullish on that lady down the street. Those lawns have been looking very well mowed. She must be doing pretty damn well for herself. But when it comes down to Netflix, oof, I don't know, folks. I don't know. We'll see. Timestamps below, we'll get to work in a second, but first a quick plug. Moomoo is offering a summer exclusive where you can get all the way up to 10 free stocks valued all the way up to $2,500 when you sign up using our link down below. Excellent trading app. They offer a ton of resources that can help you step your trading game up. Yes, folks, I understand that for a lot of us, it may be hard to step our trading game any more down, but having the right trading app and the right resources can really take you to the next level. This promotion does expire at the end of July, so if you do want to take advantage of this promotion, I recommend doing it soon. Worst case scenario, you can always withdraw the stocks and go somewhere else, but I think you're going to like them, and they're betting that you will. So I want to start with GoEV. GoEV, aka Canoe, is skyrocketing week over week, and there's a few reasons for this. Firstly, they have a big deal with the Mart of Wall, where Walmart ordered 4,500 electric delivery vans with an option to buy up to 10,000 of them. Secondly, Walmart is acting like a jealous little overbearing girlfriend and blocking them from selling to Amazon as well. In fact, if you look at the first section of their latest 8K filing, item 1.01, it says specifically, quote, under the EV purchase agreement, the company, aka Canoe, has agreed that for the duration of the agreement, it will not enter into any agreement for any services involving the design, manufacture, consult, advice, lease, or sale of EVs to blah, 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 Amazon, its subsidiaries, or affiliates. Basically, Walmart made Canoe sign an agreement saying, hey, you know what? You can go and date around, but you definitely can't date Amazon. And this is creating this very interesting dynamic where markets are seeing this as Walmart and Canoe versus Amazon and Rivian. Walmart being the e-commerce underdog that is trying to catch up to big dog Amazon. And then number three, as is so common with these big runners, you also have a bit of a contrarian situation going on here. GoEV was in a situation where the stock had been discounted about 90% before this recent rally, and there were serious concerns that they may not be able to survive this current environment. They issued what's called a going concern notice, which basically says, hey, we may not have enough money for the next year, so we may go bankrupt before then. We may have to cease operations or be sold off to somebody that does have capital. And in this environment, who knows who has capital to keep this running? Especially when there's so many other EVs on the block. So when you have something like this that's a massive proof of concept for their product, it creates this dynamic where all of a sudden you get all this contrarian capital going in and chasing things up. Now this is a company that's not just pre-profit, but pre-revenue, even last year, and in the frothiest market conditions, people are like, pre-revenue? Oof, that might be pushing it a bit. These days you could be making insane profits and they're like, yeah, your stock is probably worth like zero. Pre-revenue and rapidly burning cash? Oof. Not a fun time. And that is why you have seen short sellers just totally try to pounce on this with short interest skyrocketing as the share prices have gone up. But at the end of the day, what you have here is a speculative EV company that has been beat down in the macro condition and beat down because of insane cash burning rates. But at the same time, now has an actual deal to look forward to and something that people can get hyped about, while at the same time, short sellers are basically trying to bring this back down to zero. You combine that with recent demoing from the US Army, the fact that NASA tapped them for the next lunar landing, and they're pretty edgy looking SUVs, and all of a sudden you got yourself a nice EV spec play. And the stock has been experiencing that, and you could say, well, isn't it done now because it's already running? Things that run must go down. Well, perhaps, but I want you to look at something very peculiar that is happening in the options chain, the option chain. You go over to the options chain for contracts expiring July 29th. You're seeing some sudden and outsized concentration in calls with strike prices at $4, $4.50, and $5. What does that say? Well, it says people really like gambling. But it also says that people are factoring in a high probability of GoEV staying above $4 for the next 2 weeks leading up to July 29th. If GoEV trades under $4 a share at expiration, all of these are going to expire worthless and they are a complete loss for holders. And the reason that is a very big deal is because GoEV literally just took $4, and a couple weeks ago we were at 175. So the idea that you have all this concentration and people buying all of these options that for the most part are still out of the money and are at higher strike prices means that people have looked at these announcements and this Walmart deal and judged that GoEV is going to stay relevant enough to stay above $4 overall for the next 2 weeks, which is very unusual considering that pretty much every small cap stock in any environment, but especially this one, tends to dump massively after it has a big catalyst run. Almost 99% of the time. So this indication says that a lot of folks are betting that this has at least 2 more weeks of holding power and relevancy. But you usually don't just buy small cap call options because you think your stock is going to slightly hit your strike price or because you think it's going to slightly be over it. No, you're buying it because you want a moonshot to a much higher level and you're trying to amplify those gains with options. My guess is that your average player in this sees a breakout opportunity in the underlying stock from this cycle high at just under $5 to something as high as $6.50 to $7. If you get a rally to that extent, these options are going to be very, very deeply in the money, which means what? Well, it means cha-chinga. If this stock cools off this week into Monday, Tuesday, or Wednesday, and then finds support and all of a sudden you get some buying pressure, well, all of a sudden you have a new breeding ground for the next momentum cycle to take you to a newer and higher high. Hoo, hoo, hoo. And people eat up these contrarian trades like they're candy. Oof, a company that everybody thought was going to go bankrupt and now Walmart's working with, cha-chinga. Every single time I say cha-chinga, that increases the odds that you're going to be profitable on this. It just increases it a negative amount. Jokes aside though, I mean, hey, look, at the end of the day, this is a company that could still very much go bankrupt. Or perhaps they might decide to dilute and screw shareholders that way. But until then, for speculative traders who are looking for that adrenaline rush, I would say wait for it to cool down and then wait for it to show that proof of concept that it's increasing again. What does that mean? Well, break over the SMA, a 5% pump from a support level, things that make you lick your lips. Next, I want to talk about UC. UC? UC. This is a stock that we briefed on 30 minutes prior to market open in our ZipTrader U morning briefing on Friday, and it did run a decent amount on that day. But the reason that I really want to mention this is because a lot of folks were like, you know, Charlie, with all of this macro mess and supply chain havoc and overall energy costs and all that kind of stuff, what is a trade that allows you to trade on this kind of situation? How do you benefit from that? And one of the good rolling ways to do that is with maritime and overall transcontinental shipping companies. The way that I see it is that costs of shipping are skyrocketing. And a lot of that is energy related, but there's also just a massive shortage of ships, and companies with ships on hand or in tow will tend to see outsized profitability for no reason other than the fact that there's a shortage of them. And UC is an example of a company that pumped up pretty damn massively on news that they were going to buy some more ships and actually get their hands on them, which means that they could actually benefit more from this. And we briefed on it Friday morning because of that. But you see example after example of similar catalysts on tons of different companies. Anybody that is saying, oh, we're increasing our shipping capacity, oh, we're buying new ships, all of a sudden, And with UC, for example, the reason we liked it is because not only did you have this news that they were buying ships, but this is also a newly spun off company, which means what? Well, no options stealing some of the demand from the bulls, and no, or at least very, very, very limited short selling capacity, which means that that catalyst left all of this demand free to chase up the prices. So keep an eye out for companies that have similar characteristics or at least similar catalysts. But when it comes down to UC, I would say my thought process right now is ask yourself, why do companies spin off their entities? Well, largely because they think they can isolate areas of their overall companies that would do better in terms of getting investor capital versus the overall entity. They're looking to expand the amount of investor capital that they get. And in order to really lock that in, they need to do offerings afterwards, right? UC actually already sold off massively prior to this rally on news of an offering. So my thought process is this company is trying to use the spun off entity to either number one, consistently drive more share offerings, which they can then use to buy more ships, and or number two, make better financing agreements. I think it's actually going to continue to be a player, but keep in mind that on the horizon, I wouldn't be surprised if you get another dilutive offering or another situation like that. This is a type of stock that you play the runs, but you don't let the runs play you. I don't think that you're going to get back-to-back, week-to-week dilution. I think if it does have a period where it goes up 2-3x, you're definitely going to get hit with a massive offering. But overall, for a short-term trade where you're playing the intraday runs and you're making sure that you're playing only when it shows that proof of concept, I think you might want to make sure that this is on your radar. Next, Madam CLNN. So there is perhaps nothing that screams pre-2020 Charlie more than this particular pattern. Back then, I would film 3 or 4 videos talking about purely technicals and chart patterns and market psychology. Hey, I love covering macro. I love covering the long-term value of companies and their overall growth. I love covering overall fundamental catalysts and what's going on day to day. But at the very core, I am really somebody that loves market psychology and technicals. What's happening on the chart is really just a depiction of market psychology. And with CLNN, we followed a strong up and down comeback cycle with very consistent increasing support and stagnant resistance levels. And then boom, you get a solid breakout and that old resistance becomes a new support. Oof, just love it. Now, from a trading perspective, when you see a setup like this, you look at it and you plot the next sell-off cycle and confirmation of an uptrend as an opportunity to ride the next wave. A lot of people look at a setup like this and they'll say, oh, I wish I had seen this pattern a whoop or two ago. But a real trader will look at this and say, hey, I recognize the pattern now, which means that it's time to put it on my radar, set some alerts, and be prepared for when the next cycle starts and when this sells off and start showing signs that it's going to bounce again. Okay, let's go ahead and move on. We're going to talk earnings. On Monday, you have Bank of America, the Sachs of Goldman, Charles Schwab, Synchrony before open, IBM after close, some random medium-sized banks. But here's the thing. A lot of the pain in the economy has been concentrated in the financial sector so far. Most companies in the economy are certainly slowing down or at least showing early warning signs of slowing down, but the financial sector is really just getting hammered. I mean, we heard last week Chase, probably one of the best managed banks in the world, saw a 20% decrease in earnings. Morgan Stanley, similar results. Wells Fargo says they are expecting continued natural decline in their mortgage segment as rapidly rising rates are just destroying consumer demand for houses. And it's true that when the Fed tightens, the first firms that are hit are usually the financial ones because investment capital dries up, investment returns dry up, but then eventually a drop in investment then turns to a drop in the ability to borrow, and all of a sudden consumers and businesses can't borrow as much. And then all of a sudden they can't borrow much of anything. And then all of a sudden that strain that started in the finance segment is spread everywhere. Right now, a lot of the financial strain that you're seeing in the broader economy is just driven by inflation and profit margin crunching. We haven't really seen, to a large extent outside of the stock market, a huge impact of specifically borrowing costs rising. Right now, you're still at the stage where you have to look at the banks to see what exactly is going to come over the next few quarters. So pay very, very close attention to what we hear from these banks heading into tomorrow. And then Tuesday, you have Johnson & Johnson, Halliburton, Lockheed Martin, Ally, Hasbro, Netflix, JB Hunt, Interactive Brokers, and that's pretty much all I care about for that day. Pay close attention to what Lockheed Martin is saying, representing sophisticated U.S. manufacturing from things like national security products to aerospace, defense, and so forth. Netflix, the bar is pretty damn low going into earnings. Are they still struggling to increase subscribers? An update on their integrated ad business and so forth. Wednesday, you have Abbott, Comerica, Lithia, United, Discover, Kinder Morgan, and the big story, of course, is going to be Tesla. This is probably going to be the biggest story all week. To me, there's no stock that symbolizes 2020 and 2021 froth as much as Tesla. I like Elon, but he and his stock are always going to be very, very volatile. And as somebody who has watched the ebbs and flows of Tesla for years, I have seen so many cycles where people just loved it and said they'd buy it at any price, to then everybody just going and saying, oh, you know, we were wrong, and then everybody just dumps it and then it sells off massively. I think the Muskmeister and his team of racing horses leading that company are going to end up being winning horses. Electric horses, of course, because the farting is bad for the ozone. But still, in this kind of financial crunching, I would be shocked if Tesla gets away without any massive scars. Thursday, you've got AT&T, American Airlines, Nokia, Domino's Pizza, Snapchat. Let's see an update on their ad business. Capital One, Mattel, Seagate. Then Friday, you have Verizon, American Express, Twitter, and NextEra Energy. Interestingly enough, I read some reports from Barron earlier today that said some big money moves were slashing stakes in Verizon and buying AT&T. Let's see if they know something we don't know. Of course, I am not a big believer in people sharing information with their close buddies that work at other publicly traded companies or work at different funds. I think that everybody plays very, very fair and that we, the retail trader, are just greedy for suggesting otherwise. But I'm very, very interested to see if something weird happens there. And keep in mind that the week after this, you have all the big tech dogs reporting. You got the Fed's FOMC meeting and you got the GDP calculation for Q2. So we've certainly got a lot heading our way. Anyways, folks, that caps off this video. I am looking forward to spending this week with you. Make sure to subscribe down below. If you want to get up to 10 free stocks with Moo down below, I'll put that link. Make sure to take advantage of that before the end of the month. And if you want to learn how to trade rather violently, we also have our link to ZipTrader U down below, which can give you lifetime access to our step-by-step lessons, private chat, daily morning briefings, and of course, our full price target list. Links for everything down below. Have a good rest of your day.